The Great Squeeze Setup. Why BYND might be the next volatility magnet every few months. The market picks a new underdog to turn into a war zone between shorts and retail traders. And right now, Beyond Meat, BYND, looks like the next one. The stock has quietly become one of the most shorted mid-cap names in the market. And that alone is fuel waiting for a spark. Let's look at the setup. As of the latest data, short interest on BYND is hovering near 38–40%. Which means nearly half of all available shares are being borrowed to bet against the company. That's a huge red flag, but also an opportunity. Why? Because when the technicals align, heavy short interest becomes rocket fuel for short squeezes. Here is what we are seeing on the technical analysis side. The daily chart shows a base forming between 780 and 850, a zone where buyers consistently step in. RSI just crossed above 60. Which means bullish momentum is picking up but hasn't overheated. MACD histogram flipped positive, suggesting the start of an uptrend. Volume over the last 5 sessions has doubled compared to the 30-day average. If BYND can hold above 875 and break the 960 resistance, the next target is around 1125, followed by a psychological push toward $13.50, the level where shorts will start to panic. Now let's talk fundamentals and catalysts. Beyond Meat's current valuation is barely scraping $600 million, down from $14 billion at its peak. Yet, the company's restructuring plan has finally started showing results: improved gross margins, lower operational costs, and better distribution deals with restaurant chains. Add in rising consumer sentiment toward sustainable food alternatives, and it is easy to see why retail investors are sniffing around again. But the key wild card? Institutional flow. Big funds have been shorting this stock heavily for 2 years. If even a few of them start covering or rotating exposure, price momentum could accelerate fast. It's not about belief, it's about liquidity. News-wise, analysts are also starting to shift tone. Recent mentions of AI-assisted ingredient modeling and carbon footprint optimization. Tools have made Wall Street reframe BYND as more than just a fake burger company. It's now an AI-integrated sustainability play. That's the kind of rebranding that sparks speculative rallies. Now, for those looking for correlated or sympathy plays, here are the ones to watch. Oatly, low float, similar ESG hype cycle. ADM, benefits from rising plant-based raw material demand. SMPL, Simply Good Foods, small cap that moves on consumer health trends. PLTR, Palantir, surprisingly connected through AI-driven food and logistics systems. Think long-term synergy, not correlation. So here, as the breakdown,